Every time that I attend the Money Matters workshop that Drew teaches, I will tell you there's 50 some people in that room. And when he gets to the tax stuff on, the second day, and he's going through all these different things, pass-throughs, whatevers, all the things that owners could be taking advantage of. Inevitably, there's at least one person in the room says, oh, well, we had that conversation with our bookkeeper or our CPA, and they said that if we did that, that's going to flag the IRS, or we really shouldn't be doing that, even though maybe you could do that, but we don't really want to be doing that. Or just flat out saying, that's not legal. And I'm like, everything on this screen is backed up by an IRS publication, but yet we make these assumptions. And the reality is those assumptions that are not backed up by data, those assumptions cost an owner tens of thousands of dollars a year, if not more. Like you had recently shared a story, not obviously breaching any confidentiality at all. I have no idea who the agency is or anything like that, but you and I have talked about some tax planning successes before, and it was a $300,000 savings, 300 grand. I mean, that's just astounding to me that when you get smart and proactive and think differently about money, that's how much money is being left on the table. I mean, that could be a huge chunk of somebody's retirement.